Well, for more on the markets, I'm now being joined by the head of research at GTI Securities, Chukwuma Anyanwu. Good morning, Chukwuma. Thank you very much for coming. It's nice to have you in the studio, as always. Anyway.
Thanks for having me. It's great to be
Well, were you expecting the kind of bullish sentiment recorded yesterday at the market?
No, not really. I expected that we would have seen more bearish sentiment to the market, considering the fact that we're just coming in from the long holiday, and it's expected that probably a lot of people would have exhausted the idle funds that they have, and you probably see more people trying to sell off than buy. But, well, it was a pleasant surprise that we had that bullish sentiment, and it means that some respite to the market, and it's something that we're all grateful for.
All right. Now, despite the return of the bullish sentiment that we saw in the market, the total value of market transactions was still about 3 billion naira, which is still, of course, far cry from the transaction value of 6.7 billion recorded. That was on May 16 of 2017. Now, are the foreign investors, still mopping up Nigerian shares?
That's a major concern area for me. I think I would have expected, I would have been more at peace if we saw value of transactions at around 5-6 billion. But with the Federal Reserve of the U.S. Signaling that there's a potential for a further rate hike, it means that more foreign investors will probably be looking into holding government securities from the U.S., which makes it more attractive now, considering the fact that it's higher yielding and lower interest, and lower risk. So for me, it's a worry that we are not seeing as much the value of transactions as we saw when we saw the resurgent markets earlier in the year, or around May, from around April, May. So for me, it's a concern because I would be worried that in addition to oil price instability, which has the potential of crippling our dollar supply, then the fact that the Federal Reserve is also going to be hiking rates is a worry for me.
Okay. Now, let's look at some of the company news that came into the market. We had Unilever notifying the exchange of its proposed right issues. Now, what are the implications of this on the share price of Unilever?
When this news first filtered into the market, what we saw was a situation where people were skeptical. So there was a sell pressure on the price of on the stock of Unilever, and it was natural because when there is any indication of a share dilution, people worry about the company's capacity to be able to pay dividend as strongly as they used to because of the expanded number of shares. But that said, I think the better way to look at it is the fact that there is renewed interest from the parent company of Unilever, which means they are very interested in the Nigerian story. The Nigerian subsidiaries of interest to them, increasing their stake, which indirectly this rights issue is something that they will be looking at doing. Then they're also going to be restructuring some of their debt to equity, which is also something that eases the bottom line pressure of the company. And for me, there are positive areas, to the share dilution. It means that if they are able to be more operationally efficient, cost lines are streamlined, and they are able to translate more of their revenue into bottom line profitability, then yes, the capacity to pay dividend is still in there. And if they are able to also develop an effective strategy to be able to penetrate the market better, then we are looking at stronger numbers in the top line. So for me, it's something that actually is a mixed bag. As much as I'm worried about share dilution, I think the greater impact of what it will do to the business overall is positive for me.
Now, if the shareholders approve the right issue, do you see this being oversubscribed, or what level of subscription are they likely to get?
It's actually a good question. This is a good time for people to come to the market, to approach the market for capital raising, fundraising, because of the fact that valuations are better, and it will mean that there is better appreciation for shares now. So I think I would expect that it will be favorably subscribed. I don't know about it being oversubscribed, but I think it will be favorably subscribed because there are still inherent challenges in the segment of the economy where it operates. Competition is still a major challenge, and Unilever is a strong brand. So I expect foreign investor participation to also boost the level of subscription. So yes, I think we'll get some positive subscription level from the rights issue.
All right, let's look at Julius Berger. That's another company. That one is just trying to venture into oil and gas space. Now, do you think the company is biting as much as they can chew?
Well, as far as biting more than it can chew, I think they are just towing the trend of a lot of the other businesses in Nigeria. We recently saw FO acquire, even though it is in line with, is an extension of their business, acquiring a generating company. We also saw Transcore venturing into power from the traditional hospitality business where it's known for. So I think Julius Berger is doing the right thing, provided that they have done proper study to be able to properly assess the risk, the impact of this on their overall business. I think they should also do a bit more with trying to strengthen their core area of construction. But I think they are not really necessarily biting more than they can chew at this point. I think it's a positive for the overall business. Looking at the level of competition in the construction space, one begs to see reasons with the fact that it's better you start exploring other opportunities in the economy that the Nigerian economy has to offer. So for me, I think it's positive, but I'm holding my breath to be able to see how well they're able to get the right human resource and the right strategy to be able to penetrate that segment of the market.
All right. By tomorrow, I mean, the first half of the year would have gone. And, of course, we'll be expecting the half-year earnings. What's your outlook across the sectors?
Well, generally, it's been a positive year. We've seen from the beginning of the year a country that came into the year in a recession, inflation at an all-time high, almost an 11-month or year high. Yeah, I think so. We've had challenges in the course of the year, and it has impacted on business performances. But they surprised on the upside with their first quarter numbers released. So I expect that with better environment in the second half of the year, we'll see them sustaining the level of performance we saw in the first quarter, save for some other companies segments, save for Tier 2 banks. I am constantly worried about the level of non-performing loans that might come in as a result of the exposures to certain segments of the economy. But overall, I think that we would see pretty decent H1 numbers from across board for all the companies that we track.
Now, Corn Oil just released its full year 2016 and, of course, the first quarter for 2017 earnings. Were you surprised at the late submission of that result?
No, I wasn't. It's not something out of character for Corn Oil. It's something that they indulge in.
Why would you say that if I may
It's something
ask?
that they indulge in regularly. We've seen situations where results are not released as when due, and they usually submit late. So for me, it's not surprising. For me, it's a worry actually, because I think that a lot more needs to be done in terms of corporate governance. Because if we're going to be looking at Nigeria being an investment hub for foreign investors, then we must adopt global best practice. I think releasing your first quarter results and second and full year results at the same time, given the time difference when every other peer has done the same, considering the fact that you operate in the same segment, I don't understand what the peculiar challenges for Corn Oil will be. So I think it's not something that one should be celebrating about.
All right, thank you very much, Chukwuma, for sharing your thoughts with us. Chukwuma Anyanwu, Head of Research at GTI Securities. We'll take a quick break. When we come back, we'll look at the commodities market. To stay with us.